Brad Williams, Frugal Finance, scams. Let's talk a little more about scams. Be alert to signs of imposter investment scams. Imposter scams can take many forms, and there are new variants every day. In investment-related impersonation schemes, a common thread is that scammers misuse the name of a real registered investment professional or firms to create the appearance of legitimacy. Imposter schemes rely on tactics known as source credibility, building trust by claiming to be properly registered and employed by a well-known firm, and they can be alarmingly convincing. Sometimes these scams take off through social media promotions, such as incidents involving individuals portraying themselves as registered investment professionals and advertising access to stock and investment groups on encrypted group chats like WhatsApp. In other types of scams, individuals might also pose as investors and create social media posts or leave comments detailing how much money they've made with a particular professional or strategy, with links leading to fraudulent websites or telephone numbers leading to WhatsApp. Some scammers offer fictitious security investments, banking products, or crypto asset trading strategies which they tout as can't-miss opportunities. Imposter scams can be difficult to spot unless you know what you're looking for. Here are patterns to be aware of and tips to help spot the fakes. Imposter websites. Bad actors behind imposter websites often take the name and other publicly available details about a registered investment professional and use this information to establish a fraudulent website. The scammers then direct potential investors to the imposter sites. One goal is to obtain investors' personal information or login credentials. In some cases, these bad actors will lure investors into making deposits into fake but officially seeming accounts in order to steal investor funds. Imposter documents. Another type of imposter scheme involves an unregistered individual using false registration documents to attract potential investors. In this instance, the scammer might create a fake version of a public FINRA BrokerCheck report for a legitimate investment professional, often with extensive experience and a spotless regulatory record. In most cases, the real professional isn't aware their identity is being misused. The scammers might then send the fake report to potential investors using the name and registration number, known as a CRD number, of the registered investment professional, but associating themselves with a company that isn't registered as a broker deal with FINRA. The solicitation might include other documentation and a request for investors to respond with a photo of their driver's license and other personal information. Fraudulent products. Imposter schemes might also involve fictitious products designed to closely resemble legitimate investments and respond to trends to the marketplace. For example, in times of volatility, investors might be drawn to investments offering lower but more stable returns. Scammers might also take advantage of the evolving world of crypto assets to offer fraudulent investment opportunities or direct potential investors to websites that mimic legitimate crypto asset trading platforms while actually sending deposits directly to the scammer. These tactics are similar to those used in financial grooming scams, in which bad actors create a false sense of trust with the target for the sole purpose of eventually draining their personal wallets. Keep your money and personal information safe from these types of scams. Take these 6 steps to heart. Be alert to red flags of fraud, guarantees, unregistered products, overly consistent or high returns, complex strategies, missing documentation, account discrepancies, secrecy, and pushy salespeople are all cause for concern. Practice spotting persuasion tactics that scammers use, and always exercise healthy skepticism. Be particularly wary if you were solicited for an investment when you weren't even looking for one. Go to the source. Don't assume that the information you receive from a supposed investment professional is legitimate. For investing, research both professional and firms by going directly to the source that collect regulatory information, including FINRA's BrokerCheck and the SEC's Investment Advisor Public Disclosure Database, and contact your state regulator. Compare whatever documentation you receive with the reports you obtained yourself and take note of any inconsistencies, such as a slightly different firm name or location. You can also use these databases to verify whether the phone number or website provided to you match what's listed in the firm's client relations summary. Verify contact information. See what comes up in a search online for the names of the individual and firm soliciting your business. Does it match the information provided to you, including the contact information? If something doesn't look right, do a little more digging, including a map search of the address or a reverse lookup on the phone number. Call the financial institution using a phone number on their form CRS or their public website, not the number that's been provided in the suspect's solicitation, to verify the legitimacy of the professional in the investment. Look for things that appear out of place. Keep an eye out in any investment solicitation for typos, poor grammar, misspelling, odd or awkward phrasing, or misuse of investor terminology. Scammers might use URLs or email addresses that initially appear correct, but on closer inspection reveal substituted characters, such as the number 1 in the place of the letter L. And be on the lookout for websites using the registered representative's name as the domain name for the website, e.g. first name, middle name, last name.com, or the use of different fonts within a document which could indicate doctored information. Confirm product legitimacy. Clarify the type of product you're purchasing and type of financial institution you're working with, since not all financial institutions are registered to sell all products. For example, only FINRA registered broker-dealers can sell securities. If a website is offering only one type of investment, it should give you pause. Also, exercise caution if an investment requires a high minimum deposit, such as $200,000 or more, or advertises such perks as higher than average interest rates, low or no risk, or FDIC insurance coverage. Investigate the products you've been offered and see if the details align with what you've been given. If the investment is represented as a security product, look up the QSIP number, a unique number for legitimate securities. Don't send money, crypto, or personal information. Be extra cautious if you're asked to send information to a personal rather than a firm's email address, to respond to phone numbers that aren't listed as official from contact, or to send money directly to the individual or a third party. Don't ever send money, crypto assets, or personal information such as your driver's license, passport, social security number, date of birth, or bank information until you've verified who you're working with. If you're suspicious about information you receive from an individual or firm soliciting your business, contact FINRA or another regulator before you send any personal or financial information. If you're an investment professional and have concerns that someone is using your name or information as part of the potential scam, contact your firm's compliance department and alert FINRA by calling the BrokerCheck hotline. If you have any questions or concerns regarding the countless number of scams, comments. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.